You put out a pretty compelling sum of the parts analysis out today with regards to Amazon, and a lot of this seemed to be based on this idea that people are either undervaluing Amazon Web Services. Is that right?
Yeah, good afternoon. What we're really doing here is making a valuation argument that if you split Amazon up into three major segments, so core retail, AWS, as you mentioned, and then advertising, and then apply something close to a comp group average multiple onto the 2022 estimates for each of those segments, then you basically arrive at a share price of around $3,000 in 2 years, or in mid-2021, if you assume investors are going to be trading the stock off of 2022 estimates at that point.
Now, you say Amazon can reach that level with no major acquisitions or significant changes to the business. So does that mean that at a minimum, Amazon would reach 3,000 if it does make any kind of significant changes or big purchases? It could therefore surpass 3,000.
Yeah, that could definitely help. I mean, anything on the inorganic side could potentially drive the share price higher, depending on the parameters of growth and profitability of any such acquisition. So that could certainly have a potential impact. You know, really what we were trying to say is that the analysis doesn't require anything inorganic, so no acquisitions. But as you mentioned, it would be helpful to investors' understanding of the valuation of the various segments if AWS were to be spun out, and we really have no indication if an AWS spin out is a real possibility or not, but it would certainly be a catalyst for the realization of value for each part if that were to happen.
So Mike, in your report, you sort of broke down sort of segment by segment, Amazon segment by segment, and how it compares to various companies that would align with that particular segment. I'm wondering, when you look at Amazon as a whole, who is its main competitor? What do you base sort of a relative valuation on if you're looking at the company as a whole?
Well, that's a tougher thing to do, just because you've got three very distinct businesses, and that's why we do encourage people to focus on the sum of the parts. I think most investors, when they do look at it on a whole basis, compare it to primarily other internet companies versus other software as a service or cloud software companies or advertising companies, just because the core retail business is the largest portion of the business. But we do encourage some of the parts view, given how different those three businesses are from one another.
And looking at some of their different businesses, you also have their ad business worth, $120 billion by the year 2022. What's the likelihood that that could be a spin-off target Amazon considers?
I think it's less likely than an AWS spinoff, and the primary reason for that is because the advertising business is pretty closely, or very closely, I guess I would say, aligned with the core retail business, whereas AWS is more of a business that really doesn't need to be aligned with either the advertising or the core retail portions of the business. And spinning off AWS could obviously have the positive benefits of creating less competition, which could drive more business for both AWS and Amazon core retail for each of those segments. So that could be a potential benefit as well.
So, Mike, when you look at the retail side of the business, the e-commerce side of the business, do you see the growth rate, I guess, slowing at all, or are they going to be able to sort of maintain that sort of over the next 2 or 3 years?
Yeah, it's worth pointing out, I guess, that the estimates for Amazon's advertising business and AWS business, we do assume growth rates that are decelerating each year, but are still, well above the comparative averages. And then for the core retail business, as you asked about, we assume the same thing, that it is slowing, but it's still growing at more than 4 times the pace of brick and mortar comps. On the other hand, from an e-commerce comp perspective, it's growing slightly less. So when we factored that into our sum of the parts analysis, we did apply a slight discount versus the e-commerce comp group to reflect that slightly lower growth rate.
We have about 30 seconds left, Mike. Amazon at $3,000 would mean a market cap of just under $1.5 trillion. What kind of political risks does that create? Won't that just encourage Senator Warren and her likes to push for a breakup of the company?
It could, and I think, generally speaking, we're going to continue to see large cap tech being targets of a lot of different commentary from politicians and others.
Yeah.
At the same time, AWS spinning out could certainly answer that question.